seeing on your side, Friedberg, in terms of deal flow in the private markets?
Yeah, it's
and raising money. Yeah, because you have to raise money for your companies.
It's not easy.
Okay, unpack it. What's not easy?
Well,
what are the conversations like? Give us the anecdotal information.
I mean, I've seen a number of term sheets get pulled. So I think we've heard a lot about companies that kind of during the Q1, early Q2 timeframe had term sheets, weren't closing, got delayed out. And there's a number of kind of examples of repricing where the investors come back, markets have changed, let's reprice the thing. Or, hey, we're not going to do this deal anymore. We're going to sit on the sidelines and wait till the market settles. Or our LPs actually aren't going to let us fund new stuff. There's a lot of those sorts of
shenanigans. Unpack that last one for people. What does that mean?
Investors have LPs. They have investors themselves, and their LPs are coming to them and saying, do not put more money out right now. We are telling you, we are not going to wire our money to you. We need you to wait until
even
the market
though
settles.
They're contractually obligated to, they're telling
theoretically
them,
they may or may not be contractually obligated to, but obviously these are long-term partnerships. And so when an LP, or a group of LPs says, guys, we're not comfortable with you deploying money right now, you're in a 10-year partnership, 15-year partnership with them. You're going to, as an investor, as a fund, you're going to say, okay, I'm going to kind of listen to that right now. Now, the bigger issues in Series B, C, and D, where companies have some traction, have some performance, have raised a bunch of capital, have done a bunch of work, and investors don't know what they're worth. They're like, hey, is this thing worth 25 million or 125 million or 500 million? Last year, you could have raised money at 500 million. I mean, look at what happened with one of those crypto things, those crypto trading platforms. They raised $500 million last July, and they just sold the business for a reported $25 million after being valued at $5 billion a year ago.
Yeah.
So the whole thing
got wiped out. And the truth might have been more like 275 million.
We don't know.
Some news that got left.
Yeah, and so, but Series A, people seem to be pretty active again. And
they're active again, but the prices now for seed rounds,
but it's a lot easier.
Happening 6 to 15. Series A is happening 15 to 25.
It's a lot easier to get a deal done in a Series A because people say, "Hey, look, I'm going to give you this." You say, "Okay, I'll take it. I need the money." Series B, C, and D is where there's this whole fight because there's existing investors, existing shareholders who are saying, "I don't want to take a 50% write down, a 70% write down, a 30% write down over the last round," and fighting and then doing inside rounds and bridge notes and all sorts of other shenanigans to not have to take a negative mark on their book. Yeah.